Will the secretary call the roll?
Mary Beth Taylor, Brian Bangert,
You're muted, Brian.
Here.
Michael Kurtz,
Here.
Rick Dean,
Here.
Julia Turner,
Here.
Ruth Novosad,
Here.
Jim Finnegan,
Here.
Drake Zimmerman,
Here.
We have 7 members at the quorum. We can conduct business. Has everyone looked at the minutes of the last meeting?
I move that. I move that be approved, or I'll second it, either one.
Well, I'll take a motion by Kurt, second by Dean. We have a roll call vote.
excuse me, could you say who made the motion?
Kurtz and Dean.
Bangert,
Yes.
Kurtz,
Yes.
Dean,
Yes.
Turner,
Yes.
Novosad,
Yes.
Finnegan,
Yes.
Zimmerman.
Yes.
Motion passed. Do we have anyone that's talked to you, Phil, about appearance of members of the public on things that are not on the agenda tonight?
No one contacted me.
Okay. So we'll move on. At this point, I think our first case is not going to be here tonight. It was postponed, or so we got to wait until 7:15 to call our only case for tonight. So I guess you can watch the news for a while.
Do you want to recess then until about 7:14 p.m.?
That sounds great, Phil. We'll recess till 7:14. And that the information in the case now in hearing will be the truth, the whole truth, or you suffer the pains and penalties of perjury.
I do.
That's the best of my recollection. Will Secretary call the first case?
Uh,
You
Mr.
have-
Mr. Finnegan, are you going to need that statement to swear in witnesses when they come forward?
I would like to have it.
Okay, we'll bring it up.
Sorry.
Let me read this first, Mr. Finnegan. If the case heard tonight is finished and the ZBA has discussed it and voted on it, the case will be considered complete. If the case is not finished, or if the go-to-meeting system crashes, or the ZBA members are not able to adequately communicate before a vote is taken on a case by the ZBA, the case will be continued until 7:30 p.m. on Tuesday, December 1, 2020. Please contact the Department of Building and Zoning at 309-888-5160 for a link to this meeting or attend the meeting in person. The ZBA bylaws allow the chair to impose time limits on opening, closing, or other statements or questions or any portion of the proceedings. The chair will limit questioning of witnesses to one series of questions per person per witness. A note for those watching via YouTube live stream: the YouTube stream is not an interactive medium. Any comments on the YouTube live stream are not monitored and will not be addressed in the meeting. Please mute your phones or computers and turn your cameras off unless you are on the ZBA or you are approved to speak.
Thanks, Phil.
I'll introduce the only case. Well, first of all, I'll let you know that if you're here to attend the public hearing for the variance of Michael and Pamela Horn, that case has been continued and will be republished at the request of the applicants to be heard then at the December 1 meeting. This is case number ZA-20-01, application of the Mclean County Zoning Board of Appeals for a text amendment of the zoning ordinance of the Code of Mclean County, Chapter 350, zoning to amend Section 350-43002 PE use standard to allow an irrevocable letter of credit in addition to an escrow account as adequate financial assurance in a decommissioning fund for a wind energy conversion system. Public notice of this hearing was published in the Panagraph on October 17, 2020, and in the Normalite newspaper on October 22, 2020, as provided by law. The text amendment as proposed is on the screen. We'll leave it up while I read the staff report. This proposed text amendment was introduced in 3 parts at the ZBA meeting on March 3, 2020. 2 parts of the text amendment were recommended to be approved at that public hearing, adding the Land Use and Development Committee as a permissible entity to propose text amendments, and to allow a boat sales and service facility by special use in the agriculture district. The 3rd part of the text amendment to allow an irrevocable letter of credit in addition to an escrow account as adequate financial assurance in a decommissioning fund for a wind energy conversion system was not completed. Due to the time that has lapsed since the case was introduced on March 3, 2020, this case has been republished and testimony will need to be presented again. The county accepts irrevocable letters of credit in addition to escrow accounts as financial security for decommissioning solar farms, as financial security that a recycling facility is honoring its performance agreement, and for guarantees that proposed subdivision streets will be built according to the subdivision ordinance. The proposed text amendment would allow wind farm companies to use irrevocable letters of credit acceptable to the county as security for decommissioning wind turbines in addition to escrow accounts.
Thanks.
Staff recommends approval of the proposed text amendment. At this meeting, I have asked Mr. Steve Timmerman of First Farmers State Bank to answer a couple of questions to begin with, and then to be able to answer questions to the board and the public. Just a minute, I want to get this off the screen right now. My assistant, Daryl Mitchell, is upstairs now, and he'll come down and we'll get this off the screen when we can. Mr. Finnegan, would you swear in Steve Timmerman, please?
I will do that. Do you solemnly swear that the testimonies you give in this case now and hearing will be the truth, the whole truth, and nothing but the truth, so help you God?
Yes, I do.
Would you state your name and address for the record?
Steve Timmerman, 3114 Rusty Lane, Bloomington, Illinois.
You got that, Phil?
Did you say Rusty Lane?
Yes, yes.
Would you compare the financial security provided by an escrow account to an irrevocable letter of credit?
They both obviously do the same thing in the end, and that is guarantee funds to the recipient. Escrow account, the money's already sitting there. Letter of credit, some sort of financial institution has issued that to another party, and typically a bank will not issue that letter of credit unless they're very comfortable with the person they're doing it or the entity they're doing it on behalf of.
What is it about a irrevocable letter of credit that makes it a secure financial instrument?
It's secure for the recipient because you can demand payment if the performance is not met. So the letter should have some sort of a trigger in it, whether it's the performance of a street not being paved properly, or in this case, I guess, a windmill being decommissioned. Whatever that triggering event, when that occurs, then the recipient of the letter can demand payment from the whoever issued the letter, which is most cases a bank. So it's important to have that trigger or triggering event spelled out properly.
What kind of assurance can you have that the bank is financially stable?
I would only accept one if it was me. I would accept it from a bank that's FDIC insured, federally regulated. I would not be real comfortable maybe with an offshore bank, a bank located in the Cayman Islands or something like that, but a bank where you can do some proper due diligence through, that's regulated by the federal government. Most banks are either a member of the Fed or are insured by the FDIC. And from there, you can get all their information, whether the bank is solid or not.
Does the zoning board have any questions of Mr. Timmerman?
Yes, this is Rick. So if the entity that we're getting the letter of credit from goes broke, I mean, they're bankrupt, they file for bankruptcy,
Mhm.
the bank is still required to cover this. Is that what I'm understanding here?
Correct. You want to make sure the bank is solid, but yeah, you have the entity that the letter is being written on their behalf. If something happens to them, nothing that does not affect your letter of credit. The only thing that could really affect your letter of credit is the bank itself that issued it.
Okay, so I'm understanding this correctly. It's just as good as the other instrument that we were requiring before.
Before you were requiring, assume an escrow agreement.
I believe that's correct, Phil. Is that correct?
That's correct.
I would think they're very comparable instruments for guaranteeing performance. Typically, a bank does not like to issue a letter of credit, to be honest with you. You only do that for your very best customers. Kind of the analogy that's taught in banking school is a letter of credit is make sure I state this right, is a future obligation to make a bad loan on behalf of the bank. So the bank is going to turn over the money, in this case to the county, and they have to collect it from the entity they issued it from. So banks don't take issuing a letter of credit very lightly.
Okay, then help me understand why this is the preferred method.
That, I mean, there are different ways of doing what you're wanting to accomplish. I'm not sure one is preferred over the other. I think it's just another option.
Okay, thank you.
Steve, Brian Baggert here. Do these irrevocable letters of credit, do they expire at any point?
It depends on the individual letter. It could have an expiration date or a sunset on it, or it could be until such time the letter is called. Typically, if I was issuing it, I'd want some sort of expiration date on it from the banking side of it. If I'm on your side of it, I don't want an expiration date.
So, Phil, is it possible we can make sure that there's no expiration date considering what's involved here?
Typically and Mr. Timmerman may be able to answer this, typically they expire, but then they're required to be renewed unless it's agreeable on both sides that they can expire.
That's true. You could have it expire, but it still needs to be, you can demand that it be replaced with a new letter. A lot of lenders would like to issue a new letter every year. That gives them a chance to review it and get things necessary from their borrower, so to speak. So they use it as leverage to get information from their borrower, new financials and so forth.
What happens if the letter of credit expires and the bank chooses not to renew the letter of credit? Then what happens?
That's a very good question. That's an excellent question. And I think at that point, you would call the entity that you're dealing with as kind of being in default. They're not living up to their agreement, correct? I don't know what your remedy is, though. To
Is
be
it
honest.
the remedy then request the full payment?
Yeah, before the one that expired, you would ask for the full payment, present the letter. But the thing is, you wouldn't have a triggering event possibly in that situation.
Yeah.
Isn't there language in it that says that if it's not renewed, the person who's holding it has a right to call for payment?
It could have that clause in there, yes. That's possible. I think you just have to be very careful on the letter to make sure it does what you want it to do. I assume in this case, you want to be able to receive funds to decommission a wind farm, correct?
That's correct.
Are there other entities such as insurance companies or bonding companies that issue these letters of credit also?
I'm not familiar with any. I don't know if other people do or not. I think I don't know if they could or not. Whoever it is, well, you'd want to be able to do a background check on them.
You mentioned a sunset clause. What would that be?
Meaning by a certain date, the letter would no longer be needed. I think you gave an instance where you maybe have required for a street or a road. At some point, the road's in, it's satisfactory. The county would accept the road as is. therefore the letter would no longer be needed.
That wouldn't be good in this case.
Well, in this case, wouldn't it be that if the turbines have been removed, then there would that would be the sunset clause?
If they were decommissioned and removed to your satisfaction, you would no longer need the letter at that point.
Okay.
Would be my understanding.
Who is the owner of the letter of credit? And the question I have is, say one company constructs the windmill or the towers, and then they sell it to another entity. So does the buyer have to have an irrevocable letter of credit, or how's the mechanics of transferring ownership? You understand my question?
I understand your question completely, and I do not know the answer to that because the owner of the letter of credit would be in the county. You're in possession of the letter of credit. So
Say that
you have
again,
the
I
right-
didn't hear that.
The
What?
county would be the owner of the letter at that point because you have the letter in your possession. So you have the ability to call it. But the letter was issued in behalf of one entity, right?
Mm-hmm.
Say ABC Wind Farm, and now it's sold to XYZ Wind Farms. I did not know the answer to that question at all. How that letter of credit would it follow the project? Would it follow? I think.
Well, and then the follow-up question would be that if the XYZ entity wasn't worthy of receiving an irrevocable letter of credit, then that would be a problem, I would think.
Correct. Because I think the people issuing the letter of credit they don't want to be bound by the actions of another party. They're only familiar with the one they issued it for.
I would think we would have to have language somewhere that says it couldn't be sold unless, no company could own it unless they could get that letter of credit, that would be a condition of any sale or transfer.
That seems very logical to me. Or put a escrow agreement in place, something, one or the other.
So Steve, you bring up a good point there. What's been brought before us, and the reason we're discussing this irrevocable letter of credit is because the wind farms and in fact the solar farms said the same thing, that their banks don't really like to house escrow accounts for projects like this. That they have a difficult time getting banks to house these. And we all did exactly what you just did. So can you tell us why that would, right now we require them to put that money into an account. And what they're telling us is our banks don't want to do that.
That seems kind of odd to me because as a banker, I would rather put up an escrow. I'd rather have an escrow account just because it removes all liability for me, right? If my customer puts the money in the account, I just have to hold the account and pay it out when the triggering event occurs. The letter of credit is much more difficult for the lender because I said I have to make a future loan to an entity that obviously has created a triggering event. When we write a letter of credit, we actually do a loan at the exact same time, a loan document. So in this case, they may look at it as doing one letter of credit is easier than setting up multiple escrows. So that could be the only possible reason I could think of why you would do a letter of credit versus 47 escrow agreements with 47 landowners.
That's exactly what it is. Exactly. Okay. It's exactly that they have to have individual escrow agreements with all these different landowners, and it becomes an administrative nightmare, they said. Now I'm remembering, it's been a while, but that's kind of what.
It's easier to issue one letter of credit that would cover the entire project. So if they have a bank willing to do that, the bank has to be very comfortable with that wind farm operator to do that.
The cost of the company that sets us up, would it be any different between setting the escrow account or a letter of credit?
You know, that would depend on the bank issuing it, I guess. I mean, banks can charge whatever they want for a letter of credit. I mean, typically they charge some percentage of the dollar amount, okay? So if a bank is issuing a letter of credit on behalf of the wind farm, XYZ wind farm, they're charging them a fee to do that. That makes sense. And escrow, there's probably some sort of ongoing fee to have that account as well. But I don't know if there'd be a big financial incentive one way or the other. I think it's probably more ease of use in this case, dealing with multiple escrows versus one letter of credit.
Would the escrow account have to have money in it?
Yes,
So, I mean, a letter of credit would not.
correct.
Your percentage that they're paying every year.
So
That's the reason they like to do them.
an escrow would tie up a lot of capital, whereas potentially a letter of credit may not. But that letter of credit may or may not be secured. You won't know that possibly, whether the wind farm is securing that letter of credit with some asset. I would assume they are. Because that'd be an awful big risk for the bank to write you a letter of credit and not have any collateral behind it.
Well, as long as the bank were federally regulated or insured with the FDIC, would it really matter to us if it was a secured letter of credit or not?
It's a very good point. I don't think it would matter. Because you're going to call the letter of credit if you need the money, and they have to pay it out. That's a good question, though.
How much do you charge for a letter of credit?
Typically,
It
we
sounds
charge.
like it's not a really good deal for the bank.
It's not a very good deal for the bank. That's why we don't like to do them. Typically charge like 3% of the amount.
And that would be good for how long?
For 1 year. That's
So
just,
we're talking like 30 years. So how much do you charge for a 30-year one?
I've never done one for 30 years.
Yeah.
I think you'd probably do more on an annual basis than renew it.
So Phil, can we ask you a question too?
Yes.
So right now, when is there a department within the county that tracks these letters of credit, say within subdivisions, different things like that? So if we have an escrow account, it sounds like a bank's nightmare as far as keeping all the administration. But if we have letters of credit, then you're tracking constantly, or someone at the county is tracking to make sure we have updated letters of credit if they're only issued each year. Is that true? Or do you currently have a process for managing letters of credit?
Yes, we currently have in our department 2 or 3 letters of credit that we get renewed annually.
And this would be, we would have, if we went this way, it would be letters of credit with each company that has a wind farm in the county.
Yeah. Depending on the situation, part of the wind farms are covered by the ag mitigation agreement, and part of them are pre-ag mitigation agreement. So the ones that were pre-ag mitigation agreement, the county just wanted to be sure the property owners had some kind of security to have them removed. And we didn't want to be involved in holding any of the escrow accounts. So in any of those, we wouldn't be. We would just be assured that there were reasonable irrevocable letters of credit that had been reviewed by our state's attorney. It would be up to the property owners to verify their annual renewal and that kind of thing.
As lawyers, set up some kind of a form that they've looked at to make this so that the county's not responsible and the homeowner or the landowners are secured?
We have not gone through the process of drawing up a letter of credit for any wind farm.
If I might interject just a bit here, the agenda tonight, the item that's up for consideration is whether or not we do the text amendment. Its application retroactively is not an issue up before the ZBA today. There is a dispute or a difference of opinion as to how exactly it would affect, it would be implemented retroactively. The state's attorney's office is of the opinion that it would not automatically be retroactive to wind farms that have currently an existing special use. There is a difference of opinion on that, but that's the state's attorney's opinion. The issue today is whether or not the ZBA wants to recommend a text amendment to that requirement so that in projects going forward or in existing projects that seek an amendment to their special use permit could then ask for either escrow or a letter of credit. So to be clear, that the issue before the ZBA today is whether or not a text amendment to the current requirement would be recommended to the county board. And if I could only so easily silence my children, I'd be so very happy. I'm sorry to just completely cut off the conversation, but
We're talking about 6 words here, adding to the text or an irrevocable letter of credit. And isn't that what we're talking about? Those are the additions.
Exactly.
And I'm hearing that it costs 3% a year and we need them for like 30 years. And the bank has to be willing to renew it. So 3% times 30 years is 100% of the money is 90% of the money to redo it. So does anybody really want to do a letter of credit?
Drake, that's what we, 3% is what we charge.
Mm-hmm.
You could have, I mean, a bank could charge 1%. They could charge 10%.
Mm-hmm.
Well, and the county doesn't pay that fee. It's the
No,
wind farm.
farm. Exactly. It's an expense of the person you're issuing it for.
So for an escrow account, how much do they put up for escrow accounts?
I have no idea what you guys have required in the past.
It says
Question
right
again.
in there in that text amendment, Drake.
35,000 per, is that correct?
So they actually have to put $35,000 into an
tower.
account? And they're
Correct.
actually doing it. Okay. That's what I thought they were doing. So it is a little cheaper. Short run.
Well, I do recall in our previous, and there's no testimony. I don't know if we can rely on our previous discussion, but
This is a new meeting, so we can't do that.
what is, why is the escrow account a problem for the farms?
Could you repeat that question, please?
Why is the wind farm, why is the escrow account a problem for the wind farms?
We will have a witness, we'll have someone giving testimony later at this meeting.
Basically, we're not doing away with the escrow account. We're just giving an additional option to put the irrevocable letter of credit in instead of use that in place of an escrow account, correct?
Correct.
Okay, anybody else have any questions from the board? Don't see any. Staff, Phil, do you have any questions?
I do not.
Looks like Anna has a question.
I do.
Would you state your name and address?
Anna Ziegler, 2242 Westgate Drive, Bloomington, 61705.
This is for questions only.
Correct. I do have questions for both the county and for Mr. Timmerman, so I'm not sure which I should ask first. Since we've had the county present the case as well as testimony, I'm a little confused as to what's
Just
appropriate.
put it there, that's okay. We'll do it, whatever.
Okay. All right. So my question for Mr. Timmerman is, are you aware of any irrevocable letters of credit that have 20 years or more to expiration?
I am not.
Are you aware of any irrevocable letters of credit that are issued for more than 5 years to expiration?
I am not.
Okay, thank you. So my questions for the county, I want to clarify because there are 4 existing special use permits, and we're talking about an ordinance change that's on the agenda. So I'm going to ask the county to clarify how this ordinance change will impact those 4 special use permits. And since I'm clarifying for the record, I'm going to ask the same question 4 times with the different permit numbers. So
If I can interrupt you just for a second, Anna, I'm sorry, but that issue is not before the zoning board today. The only issue that's before the zoning board today is whether or not to do this text amendment. How it would be interpreted is for another day. But that issue is not before the board today.
I think it's important for the public to know how this ordinance, and for the board to know how this ordinance will affect existing special use permits. I think
Well,
that's an important part of their
That's
decision.
what I said earlier. It is state's attorney's opinion that it would have no effect on those prior issued special use permits, except that if the change is made, they may apply for an amendment to that special use and then put it through this process, the process for amending a special use. And that's when those questions, I think, would be certainly an issue there. But as far as tonight goes, the only thing before the board is whether or not there will be a change to the amendment that would allow for the use of a letter of credit or escrow as security for decommissioning. That's the issue that's before the board. And that's all I have to say on that.
Okay, well, we would like clarity on how this will affect existing special use permits. And it seems that there's still confusion on that point. So that's what we're seeking clarity on.
The next question.
That's all my questions.
Thank you. Thank you. Anyone else have questions?
Yes. Do we get an opportunity back here? Move forward.
Yeah,
Is there a count?
Yeah, there's a Caleb Williams, so you'll be good to go.
I think you're up there somewhere. Yeah, right at the presenter.
Yeah, yeah, there's a lot of talk.
Hey, would you just state your name and address for the record?
Amy Winterland. Address is 22825 North 3075 East Road, Colfax. My question is for,
Wait a minute. Sorry. Did you get that, Bill?
Could you say your address slower, please?
22825 N 3075 East Road, Colfax. So I have a question for the banker, Mr. Timmerman. So with an escrow account, if you had an escrow account that had a primary beneficiary of the county with secondary beneficiaries of the landowners, say 50 landowners, since the county is the primary beneficiary, would you have to have separate escrow accounts for each of the individual landowners or only one for the county?
It's a very, very good question. I can't honestly answer that because I'm not familiar really with how the escrow account requirements would be set up for. I mean, somebody would have to take, obviously, even if you had one as a primary for the county, somebody would still have to keep track of the landowners, I believe.
So
I'm not familiar with the history of this in terms of why the wind farms do not want to do escrow accounts. I'm not really privy to all that, other than I would think they don't want to mess with maybe multiple landowners. But your suggestion or solution there, or question, I guess, that seems like that might be a possible option, I guess. I don't know the answer to that.
So it's my understanding of the last two wind projects, that is in fact the way the ordinance or the stipulations are set up, that the county is primary and the landowners are secondary. So in fact, I'm not even sure they're secondary in one of the wind projects. So it's just the first two where it's problematic. So I have another question. Say, even though it's very rare for a letter of credit to go 5 years, if it did go 5 years and then the bank is asked to renew, what's the first thing the bank is going to do as far as looking at that financial entity, or that before issuing a new letter of credit, what's the bank going to do?
They're going to underwrite that entity like they would a loan.
So they're going to look at the financial stability of that entity.
Correct.
They're going to make sure that it has wherewithal to back up the letter of credit.
Correct.
What would happen if that entity, the wind farm in this instance, their financial stability was not up to par? What would happen?
I would assume the new letter of credit would not be issued.
That they would refuse to issue a new letter of credit? So then where would the financial assurance be in that instance?
I think we go back to the scenario where Phil mentioned earlier. You would call the existing letter of credit before it was expired.
So if it was a 1-year annual renewal letter of credit, you're saying you would have to explain that to me. If it was 1-year renewals, you'd have to have a trigger at what, 6 months? Or
I think 30 days prior to say, hey, are you going to issue a new letter and get a commitment that a new letter is going to be issued?
And if the bank says, nope, we're not going to issue a new letter of credit,
then you would collect on the existing letter of credit.
try to collect on a financial entity that might be somewhat headed south.
Right. And you would not be collecting on the entity, you'd be collecting on the letter.
On the bank. So there
Correct.
needs to be some system in place with the county to make sure that that timeline was very strictly followed. So that, because otherwise the county can, sounds to me like left holding an empty bag with a piece of paper that's now expired. That Is that,
If it had an expiration on it, yes. I think you have to get some of the verbiage there. One of the key things is it's irrevocable, meaning the bank can't just say, hey, we're going to stop. So most of these have some sort of a continuation pattern to them. And that's kind of the devil in the details, so to speak. I think you'd have to have the county state's attorney look at that.
are you saying that the term irrevocable means that there's a requirement to reissue a letter of credit annually? Because
That I'm not sure of, ma'am.
I thought the word irrevocable meant you could not change the terms of the letter during that duration of the letter.
During that time, correct, yes.
But not
During
that there was any obligation of the bank to annually renew at all. If they felt that the entity was heading south and this was a bad loan to make, they can refuse to issue a new letter of credit. Is that not true?
I believe that's true, to my knowledge.
And again, this might be for the county. The current verbiage in the ordinance requiring an escrow account, to my understanding, is not problematic because in that case, there are not multiple there's not multiple escrow accounts that are going to be required. There's only the one escrow account for the primary beneficiary, which is the county. Is that not what everyone else understands? Or is
No one have to answer that question.
The only place we have any escrow accounts required at this point were supposed to be held by the landowners, not the county.
the current Bright Stock project requires an escrow account at the end of 1 year of operation.
What I'm talking, the Bright Stock is controlled by an ag mitigation agreement. That's a little bit different than what we're talking about here.
The AIMA does not define the financial assurance. Our ordinance defines the financial assurance as an escrow account. The AMIA says it must be funded 10% at the first year, 50% at year 6.
The AIMA says that the county is the beneficiary, but that's the only one, those are the only ones where the county is.
The last two. The last two wind farms are covered by that stipulation, I believe, or that regulation or rule. So, okay, I have no other questions thank you, Mr. Timmerman.
You realize you can only come up once, so if you got anything, make sure you answer the question. That's the rule, only one time to come up. I just want you to be aware.
So can I ask a question of the state's attorney then too?
If you got another question, ask it now.
Because I am also confused by the fact that we would add a text amendment to allow a letter of credit for future projects.
State's attorney's not a witness here. State's attorney's not answering questions. State's attorney's here to give legal advice.
So it seems to me as if we make a change to the text amendment today, it should apply to future projects. Isn't that the case?
Again, I'm only here to give legal advice to the zoning board. And as the parliamentarian, I'm not here to answer questions. Okay.
Okay, so again, my point is the current ordinance language along with the AIMA is not problematic for the wind companies. They have said the problem with the...
Excuse me, just a second. Mr. Chairman, as you pointed out so eloquently, this is a time to ask questions of the witness and not a time to make argument. That time comes later. So
come back and give testimony later.
Okay, thank you very much.
Does anyone else want to talk? Any questions?
Of this witness, no.
Okay. No one in the room back here has any other questions on it. Was anybody on the phone that wants to ask a question or not? I don't see anybody. So, any other witnesses, Phil?
No, I have no other witnesses. Thank you, Mr. Timmerman.
So where we go from here, Phil?
People giving testimony.
Okay. The only ones that can give testimony is Anna, if she wants to give testimony.
I actually have a relatively long list of people who want to give testimony.
How do they give testimony if they haven't asked questions?
They don't have to ask questions in order to give testimony.
Okay.
They have to give in order to give rebuttal or closing statements, they have to give testimony.
All right.
Amy Winterland, do you want to give testimony now first?
I didn't really want to go first. I will.
May I ask a question? Is Phil gonna have the wind company give testimony that we can then ask questions of that person?
Oh, yeah.
Versus us going first?
Yeah, they should go first.
Yes.
Why would he start with us?
We have questions back here. There's no other witnesses. The wind farm company's not going to talk tonight.
We have a wind farm company persons who want to give testimony. Chair, it's up to you to decide if you want to start with them or if you want to start with the top of the list.
Everyone can ask questions of anyone who gives testimony.
I almost think that we ought to start with the wind farm company, myself.
Okay. Okay, Mr. Derek Heckenhorn, would you like to give testimony?
Sure. Thank you.
I need to swear you in.
Okay.
Do you solemnly swear that the testimony that's given in this case now in hearing be the truth, the whole truth, nothing but the truth, so help you God?
I do.
Would you state your name and address for the record? And would you turn your camera on?
I don't have the WebEx capability on my computer. I apologize. 800 Capitol Street, Houston, Texas, 77002.
Real quick, the caller 9 possibly mute their phone. It keeps causing a bunch of feedback.
It's on now. Oh, it's, you can go ahead with your testimony now if you want to.
All right. Thank you. And thank you for the time, everybody. So I am with Bank of America. So we would be the issuing bank for the LC. I think Mr. Timmerman did a nice job of articulating what an LC is and an escrow is. I think there's a couple of things that I would highlight and point out as I listen to some of the testimony, and how we at Bank of America would ultimately issue an LC and or an escrow to support landowners as part of this project. Starting first with an escrow arrangement, that arrangement is typically a tri-party arrangement. So an arrangement between, in this particular case, the project company, the wind company, the bank, and each individual landowner, as I understand it. And so as part of that, we would be required to open up, I think it's roughly 200 individual and distinct escrow arrangements with the landowner, the bank, and the project company all being party to that. And one of the challenges that we have in providing an escrow is, one, the operational burden of just managing all of those smaller escrow arrangements. But the bigger burden is really placed on the landowner, in that the government has required us to do substantial know your customer diligence on each individual landowner as part of their relationship to the escrow arrangement. And what that know your customer information that we require are things like social security number, address, lease information, things that I'm sure most landowners would not want to give a large bank or even a small bank and hold that, you know, entirely secretive. And that is not something that the bank is requiring. That is required by the bank, by the federal government. And when that is one of the challenges that you'll face with an escrow. The other item that comes with an escrow is that, unlike an LC, because it's a tri-party arrangement, for funds to be withdrawn from an escrow account, you need all parties to agree. So you need the project company, you need the landowners, and then ultimately the banks to all consent to releasing funds on behalf of the landowners in the event that a landowner wanted to make a draw. Whereas in an LC is an irrevocable letter of credit. That is for the benefit of the landowners, and is assuming that they deliver appropriate documentation and paperwork to the bank has to release funds and does not require consent from the project company. I think one of the other items that was raised was specifically around cost. I think 3% was mentioned. For us, I mean, we have a long-standing and global relationship with the project company. We would be charging them somewhere closer to 45 to 50 basis points for the letter of credit, where escrow arrangements would be substantially more, again, due to the diligence, the KYC efforts that go with that process. And so escrow ends up being incredibly expensive and burdensome as well for the landowners, where the LC process, assuming the bank of our standing is willing to issue the LC on behalf of the landowners, gives the landowners a much easier process and path to drawing down funds in the event that whatever is covered under the lease agreements is not honored. One of the other items I think that was raised was on the expiration date. Typically, how we have done these for many wind farms across the United States is we would issue 1-year LCs with what we call an evergreen clause. So they auto renew every single year. You're given we give 60-day notice to the project company and the county as to whether or not the LC would need to be renewed. And if we don't hear back, it auto renews every single year. The other item that I think was mentioned was around the transfer of the LC in the event of sale. And so that in that instance, typically what would have happened is the new buyer would have to either post an LC or an escrow arrangement for the same amount as the outstanding LC. So like for like, if there was an escrow arrangement, you would still have to go through the same thing. And quite frankly, it would probably even be more burdensome for the landowners, because prior to sale, you would have an escrow arrangement that would be an agreement between the existing project company, landowners, and the bank. And post sale, you would have to transfer all of those escrow arrangements to either a new bank, a new project company, and then redo all of the KYCs with the landowners as a result. So an LC does simplify that process as well. Again, fees on these types of things are paid by the project company. The county and or the landowners, have no burden. We have on our side issued LCs longer in duration than 5 years. I have not personally issued one longer than 20, I think was one of the items. And while 5 years is generally rare, it is the general practice, at least from what I have seen and what others have seen, that LCs for these types of items that you're trying to solve for, they tend to be the preferred method because of the ease of use, the cost, and the visibility that can be provided to the landowners. There are a couple of other things, and then happy to answer any questions. One item was asked around security, that we would not take any lien or pledge of any of the assets that would be as part of this agreement. This would be totally an unsecured obligation. Bank of America is an A+ rated bank, fully FDIC insured. And so, we've got comfort in the project company that we're willing to issue these LCs to support their business. I'm just going through my list to see if there's anything else. I think that's what I have at the moment, and I'm happy to answer any questions that anyone may have.
Questions on the board?
So you're saying that you, at Bank of America, and you have experience currently, and that this is the standard practice that you guys follow in general, a letter of credit?
Yeah, so the short answer would be yes. In situations where you're posting an obligation to landowners specifically, letters of credit tend to be the preferred method for the reasons that I outlined, the operational and the cost associated with it, both for the bank and for the landowners. Where you have a single project, where I think it sounds like your prior two projects, there is an escrow arrangement there. It tends to be 50-50, but I would say that similar to what we're discussing here, you tend to have that flexibility and optionality with the project company and the county or whoever owns the land rights, to where you have the option to either post an LC, a guarantee, a letter of credit, an surety bond from an insurance company. There are usually a number of options that everybody has generally speaking, has gotten comfortable with from a credit perspective.
So from the landowner's perspective, and I know you're not representing them necessarily, you're representing the company, but what's their biggest risk with a letter of credit?
Their biggest risk would be, was it their biggest risk to the escrow? Was your question?
No,
or was it to the LC?
because the escrow, the money's sitting there. There's not a lot of risk with that. It sounds like it's a lot of what you call, pain in going through the paperwork and that type of thing, but they have the peace of mind to know that the money's sitting in the account after they go through that pain. With the letter of credit, it seems to me like there would be more risk involved for the landowner or the county.
Well, I would say, remember, under the escrow arrangement, you need consent of the project company to release funds.
Right.
Under an LC, you don't. So there's that, right? So I would, first, from you were asking in terms of my view, and it's a great question. I would rather be at the beck and call of a federally regulated institution that's required to release funds than, a project company that, ultimately has to consent to the release of funds under an escrow arrangement.
Right.
The biggest risk that you have on the LC side is that, ultimately the credit quality of the bank, the project company deteriorates. But and then at that point, you need to either draw the LC, which you have the ability to do once the LC is in place, or call for full cash collateral, i.e., as part of the agreement that would be put in place if you required an acceleration of payment, or again, the flexibility of having the escrow. But the same thing could very well hold true in the event of credit deteriorating from the project company. They very well may not, I don't think that they would, but there's always the opportunity that they may not consent to the release of funds for your landowners, and your landowners won't get paid.
And just out of curiosity, are companies allowed to use monies they have in escrow as collateral for any future loans or financing?
No. Those in this particular case where you have a defined agreement between three parties, a defined use for those proceeds, those have been obviously ring fenced and allocated for the benefit of the landowners, and called upon when something occurs that shouldn't have. It's just that the challenge you have with the escrow arrangement is that it's not controlled by a single party; it's controlled by a multitude of parties. And anytime you get into a situation where you want to draw funds, somebody doesn't agree, you can't release funds, then you're going to spend time likely fighting it out in court.
Right. And by the same token, your letters of credit as a company, if I'm a company and I have letters of credit as a bank, you would look at all those letters of credit that I have issued to determine my viability, correct?
Sorry, can you ask that question one more time?
So if I came to you for a loan, and I'm a company, I'm one of the windmill companies. Now, if I came to you for a loan, you would look at my existing letters of credit that I have out there to determine my viability, correct?
I wouldn't necessarily, if a project company came to me and said, hey, I need a $10 million LC to be posted, I wouldn't necessarily look at their outstanding LCs. I would look at the current credit quality of their global business. And, based on that, we would make a determination as to whether we were willing to issue the LC or not. But it is an irrevocable letter of credit. So once it's issued, assuming no one cancels it, it just auto renews every year and ultimately would stay out there until maturity. Whenever the end date would be where everyone agrees that there's no longer need for LC.
Okay.
Could you speak to the voice of the landowner, what their preference would be?
I can try. I mean, as a landowner myself, sitting here in Houston, I don't, in corporate to act the same way. So I spend a lot more time on the large corporate side than I do on the consumer side. But me being obviously a consumer, look, I have a hard time wanting to give my social security number and a number of other personal information to a bank. I think that's really difficult to digest. So, but assuming you can get over that, I also am not necessarily overly comfortable with having three parties involved to determine whether or not I ultimately would get paid at the end of the day if something took place. Whereas under the letter of credit, once I submit the appropriate documentation to the bank and make claim, they have to pay it. There isn't, hey, let me go to the project company and determine whether or not this is right or wrong. Assuming those boxes have been checked with the appropriate docs, they get paid. And so, knowing what I know about the project company and their credit standing and the size of their business globally, I personally would feel more comfortable, and again, has been standard practice, that an LC provides as much security as an escrow arrangement, but provides a lot less burden on the landowner and provides a lot easier access to funds in terms of just being able to have draw on them, within days versus having a drawn out process under an escrow arrangement.
I want to follow up on something that Julia asked, just so I understand the answer. I think Julia asked if you have a wind farm that had, multiple outstanding letters of credit, then that doesn't play any part in determining the viability of the company going forward to issue additional letters of credit. I would think it would be some sort of liability against the company that they would ultimately have to pay.
The letters of credit are not deemed to be debt instruments on balance sheet because they're traditionally not drawn instruments. So they're commercial liabilities, but they are not financial liabilities. I'm sorry, not financial until they are drawn. And so, they are paying a per annum fee to have those out there, to have a form of guarantee from a bank of our credit standing, backstopping an obligation. And the way that we typically do it is we have a very large letter of credit facility that sits there for the project company. And so under that facility, they have a size of, I won't get into details as to what size the facility is, but they can issue 20, 30, volume-wise LCs under that facility. And so we take a view, not at a project level, we take a view at a company level and say, okay, your company has performed, you've got, in this particular case, you've got projects all over the US and in Europe. You've got revenue and EBITDA of this particular level. Is that enough to sustain X amount in terms of a broad credit facility that we, Bank of America, could provide to you? And if the answer is yes, which in this case it is, they have the ability to issue as many LCs as they need to, up to that dollar amount that we've given them. And so it's not necessarily a volume as it is an actual size of the LC that's required.
It was a good explanation. I'm glad we had him talk. Any other questions on the board? Would you have any questions, Phil?
Yeah, yes, with respect to that tri-party agreement for escrow accounts, do you have any experience trying to draw on an escrow account with a party that is not very cooperative?
I personally do not have experiences with it. But if I were to guess as to what that process would be, all parties would make claim to, or the party, in this case, landowners, would make claim to the escrow arrangement. In the event that the project company disagreed, then you would ultimately, on behalf of the landowners or the landowner, or even in this case, maybe the county would have to get involved, and then you would find yourself likely in court, arguing whether or not there's a rightful claim under an escrow agreement that doesn't fit into the box that was agreed upon under the underlying legal agreement. But I personally have not had had anybody not allow the drawing of an escrow. But again, I spend a lot of time on the wind and solar side with a number of different companies, and we tend to see a lot more LCs issued than escrows. In the off case that escrows in this particular case, take place, I can see it being a bit of a challenge, but to have no personal experience to sort of back that up.
In the escrow accounts that you've had to deal with, were they the ones that worked more reasonably? Were they with fewer landowners or with many landowners?
It was definitely not with many landowners, and I would say it was not even generally speaking with landowners. It was with a single counterparty, so potentially the county or somebody acting on behalf. Really, it would either be a single person, so the county, the bank, and the project company. When you start getting into multiple landowners, again, you get back to whether it's one landowner or 200 of them, you get into the idea of you have to reach out to every single one of them and ask for information. That in of itself is to turn it off. The landowners to want to not share that information. At that point, it gets really challenging to execute an escrow arrangement. But in the chance that they do provide, you still get back to the same issue around, access to funds is an arrangement between three parties, whereas under an LC, the arrangement is between effectively the landowner, ultimately, and the bank. And so, upon some break in the agreement between landowners and the project company, they can make a claim under the LC. LC gets drawn, and the bank is then turning to the project company for repayment.
Whenever the owner of a piece of land would change on which that turbine is located, would that escrow account have to be renegotiated?
It would for that. So in the event that if I was a landowner and I moved and I transferred that escrow arrangement, or that escrow arrangement was then transferred to the person who acquired the land, you would have to repay for that escrow arrangement with that new landowner with all in KYC that information. Under the LC, you would not. You would issue a group LC effectively, and you would only just have to update all the beneficiaries behind it. So if I moved and sold the land to you, EDP would then update or the project company would update the beneficiary list under the LC, place them under the LC with no burden to the landowner.
If you had an LC held by a bank with FDIC rating, would that give a decent amount of protection for that security?
Yeah. I mean, the answer is yes. Bank of America, being one of the largest banks in the world and in this country, heavily regulated, FDIC insured. We are constantly monitored for make sure that we have ample liquidity to support our letter of credit book, our loan book, support consumers and small business. This candidly is our bread and butter. We want to do what's right for landowners and the county and the project company and make everyone happy. And so we obviously know that our ability to fulfill any obligations is paramount. And so you should have a high level of comfort that that would not be an issue with us.
if, for example, the wind company sold that wind farm to another company, and Bank of America didn't want to participate in the LC, what kind of language would you have in that LC so that you wouldn't have to renew that thing, and the property owner or the county would be protected?
Yeah, I would have a change of control language in the LC. So in the event that the current project company did not sold its land, or sorry, its obligations to another project company, that new project company would be required within a set period of days to either post a new LC or to fund, if they were capable of an escrow account. But remember, in the same instance will take place under an escrow arrangement. So in the event that the project company sold, so if you went down the path where the project company had put in place escrow arrangement here, in the event they sold their rights to the wind farm to another project company, you would have to repay for all the escrow arrangements, because the existing project company would no longer be privy to that escrow agreement. So you'd have to go about doing the new escrow arrangements, and cash would then would be returned back to EDP Renewable or project company, and the new project company would place cash in escrow if that's ultimately what they were required to do.
Thank you. That's all I have.
Can I ask one more question? Sorry.
Sure. Oh, sorry.
So I kind of along the same lines as before, if a company has many escrow accounts set up, so that cash is tied up, it's set aside, they can't use it, would that affect their ability to finance projects, or to how would the banks look at that? Does it change their viability if they've got all that money wrapped up in escrow?
I would say it's, as a general comment, it's on a company by company basis, certainly dependent on the size and the scale of the company. I think it would certainly hurt the viability of an individual project, regardless of who it was. If you were required to place, I think it's 200 accounts with 35,000 each in an account, so that's roughly $7 million for a period of time. And so, the economics of generally speaking of the wind projects and solar generally in the U.S. are a bit thin over a long period of time. And so it does make economics of renewable assets relatively limited, which, that's sort of part one of your question. And I think part two, I would say, is for the size and scale of a bigger project company, if you're looking at it on a global basis, the amount being asked here is not significant to the overall balance sheet. And from a credit standpoint, I don't know that it would not affect our credit view of the counterparty. But certainly if you're looking at it on a project basis, it would certainly erode economics and make the economic return both for all parties involved a bit more challenging.
Well, could I ask one more? So it seems like there's insurance for everything, and what we're talking about is insurance in the respect to making sure that we have the funds available for down the road. Can these companies be required to also carry a separate insurance policy that protects the landowners and the county for the reclamation project? Let's say they do get the letter of credit or they have an escrow. Can't they be required in this instance to have an insurance policy that lists everybody here to, for additional protections?
That's outside of my, unfortunately, I don't deal in the world, unfortunately, in the insurance space. So I can't opine on whether they could or couldn't, what kind of policy what that would require. I would have to defer that to the project company.
Well, I mean, if a person buys a piece of equipment, a lot of times the bank will require that you insure that product so that you don't default on your loan. So that's why I'm asking if there's something out there that would help create additional protections.
I would, so in the case, in the world or the clients that I cover, rarely do we personally, I mean, me and the clients that I cover, do I ask for a level of insurance to support any type of commitments, whether it's letter of credit, loans, leases, any of those types of things. And that's because we're looking at the overall credit quality of the company versus an individual specific bespoke asset. I suspect that, you know, there are probably insurance policies that govern the turbines and the substations, and that they've got ample protections there. Specifically, is there a secondary insurance policy that you could conceptually put in place to, you know, sort of a backstop to the LC and to the escrow arrangement? I mean, I'm sure there's somebody out there that probably offers it, but that I wouldn't be able to opine on who that is and what that would look like. It's just not something that I play with and have been involved with, so I wouldn't have much expertise there.
Mr. Banger, there may be someone else from one of the companies who could speak to the fact that the turbines themselves have guarantees or the type of insurance you're talking about.
Yeah, I think that'd be helpful to hear from that respect, because, you know, there's a lot of loans that, you know, require you carry insurance, you know, so that would be helpful to hear from that.
Any questions? Come on.
Does Anna have any questions?
Does Anna have any questions? I can ask you. You
Gotta ask my name again.
gotta swear you in.
Amy Winterland.
And yeah, just your name and address, all I need.
Okay, Amy Winterland, 22825 N 3075 East Road, Colfax.
Questions?
So my question comes with you talked about the 1 year evergreen, automatically renews. And then you said something about a 60-day notice. Can you expand upon what that 60-day notice, what would trigger that?
Yes.
What that means?
Yeah, sure. So the way that we traditionally have set these up for other wind farms and solar projects is the LC is a 1 year LC with an evergreen clause, and the evergreen clause effectively states that unless otherwise notified, the LC will auto renew. And what I mean otherwise notified, that's usually from the project company. The LC would automatically renew for another year. The 60-day clause would be the time period in which the bank would give the project company, in the event that it didn't want to renew the LC for whatever reason, the time period to find a replacement prior to its maturity.
Okay, so that would, so that's what that 60-day notice means, that you have decided you do not want to renew the letter of credit and you're giving 60-day notice, and you would give that notice to the county as well?
The project. We would give it to the project company, would be our requirement. And then they would be required, based on their agreement, I assume based on their agreement with the county landowners, that prior to maturity of the existing LC, they would need to replace that with the new LC. But I can certainly double check to see if we would be giving that same notice to the beneficiaries. But to the best of my knowledge, I think it would be to the project company.
Okay, that's what I wanted. Thanks.
Thank you. Name and address.
Catherine Metzger, address is 20645 North 825 East Road, Carlock. My question is, have you issued letters of credit to foreign companies?
Yes, lots of them. So I actually, part of my remit in my current role is I cover a number of European headquartered clients. So, big European companies that have their parent company in Europe, with very large North American renewable players here in the U.S. And we issue hundreds of billions of dollars of LCs on behalf of foreign European and Asian companies doing business in North America.
So thank you. You implied that a rightful claim can be provided immediately and that payment would be given. So that implication would be that letters of credit are exempt from litigation. Is that correct?
Can you ask that question one more time?
You said that when there's a rightful claim, the money will just be handed over. So that's an implication that letters of credit are exempt from litigation.
I don't know that I would say that they're exempt from litigation. I think what I stated was, in a 1-year period in which the LC is outstanding and the LC has been issued on behalf of the project company for the benefit of the landowners. The landowners, at any point during that period, they can make a claim or a request to draw the LC, which is their obligation. And once the bank has received their documentation and it has adhered to what the agreed upon docs that were needed to draw the LC, that the landowners would then be paid. Whether or not there is EDPR ultimately disagrees with that, or the project company ultimately disagrees with that down the road and decides to go to litigation, is their own prerogative. The LC is not exempt from a litigation discussion. I think all we were saying, or all I am saying, is that while it's outstanding, through normal course of activity, if the landowners have the ability at any time to make a request of draw under the facility, present its documentation to the bank, and the bank will make payment to those landowners, and then will request payment from the project company.
Unless the project company disagrees.
No, again, irrevocable letter of credit. So once the LC is issued, it is at the discretion of the landowners to present paperwork to the bank. We will make payment. We will not ask EDP Renewables whether or not we can make payment or not. Payment will be made, and once payment is out the door, we will notify EDP, or the project company, and we will then seek repayment from the project company.
So in 2007 and 2008, can you tell me what happened to the Bank of America's bond rating?
We were downgraded substantially as a result of the 2007-2008 financial crisis.
Okay, thank you.
Mm-hmm.
Any other questions? Thank you.
I have a question online if you're taking this. This is Eric Elder.
State your name and address, please.
Yeah, my name is Eric Elder, 25615 East 3000 North Road, Chenoa, Illinois.
Could you spell your name and repeat the address, please?
Sure, Eric Elder, ERICELDER, 25615 East 3000 North Road, Chenoa, Illinois.
Thank you.
Yes, my question is, did I understand you said this is a totally unsecured letter of credit, so you're not actually asking for any financial backing from the project's developer?
From the project's developer, we do have a parental guarantee, but I was referencing that I think there was a prior statement that was made earlier, security meaning secured by the assets themselves, the wind farms, and in this particular case, that is not the case.
So you wouldn't actually have a control of the asset itself, but you would have some kind of security from them. My question is, if Invenergy goes under or has some financial problems, you were sort of banking on us counting on Bank of America being strong and being able to pay it, not on Invenergy's strength. Is that what I understood?
And so sorry, ask the question one more time. I'm just,
Sure, sure.
I wasn't familiar with Invenergy, so that's why I was.
Oh, I'm sorry, I'm sorry, the project developer here, EDPR. There's two wind farms going here right now. So if they have some financial trouble, you were saying you will provide the funding no matter what.
Yeah, as long as it's within so if once we issue the LC, and let's just say that it's for a year, regardless of what transpires, that LC is irrevocable and needs to remain outstanding up until the set period of time that's been agreed to, so the maturity date. So if EDP, something occurs, that LC still remains outstanding and is ultimately allowed to be drawn by the landowners.
Okay, and so from what I understand, that would it be correct to say that if, for instance, EDP has financial trouble, we can rely on Bank of America to provide this money, but that is also putting us in relying on Bank of America as well. And not to say you're not a strong company right now, but we're talking 30 years from now, anytime in the next 30 years. And but we would have to rely on your strength, not only on the wind farm company's strength. So now we're putting our hand. Is that correct? That we're putting our all our chips in now two companies having strength?
Well, so I would say that the LC, the way we would again structure it would be as an evergreen. So it would be 1 year durations that would continue to roll until the end of this particular lifespan. And so you're really looking at the end of the day at the credit quality of Bank of America to support the issuance of the LC. We're doing on behalf of EDP Renewables. Okay. We're taking EDP's risk, and the land and the beneficiaries of the LC are taking Bank of America risk.
Okay, so the beneficiaries, are taking the risk of both EDP and Bank of America, but Bank of America ultimately, so we're relying on that strength too. I just wanted to make sure that was clarified.
Yeah.
And this is all compared to rather than having just cash in our bank account. So I just wanted to make sure I'm understanding it right. Thanks.
Yep. Yeah. And just to be clear, that is generally correct. I don't know that I would say that it's as simple as having cash in the bank account, because while there is cash in the bank account, having access to that cash is a different story, because you're now solely reliant on multiple parties to say, yes, I would release that cash to the landowner.
Yes, but I'm still reliant, is that correct, on multiple parties in the other scenario, EDP and Bank of America and the landowner. So either way, we're still relying on multiple parties, but in the one case, there's actually cash in a bank account with our names on it.
Yeah, in the LC scenario, you're relying on B of A to make payment to you. In the other scenario, you're relying on EDP to agree to make payment to you as part of the escrow arrangement.
Okay, thanks.
Yep.
Anyone else have questions, Anna?
Yes. Anna Ziegler, 2242 Westgate Drive, Bloomington. Does Bank of America have escrow accounts in place with any existing wind farms?
I currently, I would like to say the answer is yes, with a specific, I don't know the specific, I can't share, sorry, the specific wind farms, but yeah, we have escrow agreements. Not many, but we have some with a single beneficiary of the escrow arrangement.
Okay, that was going to be my next question. How many beneficiaries are listed on those escrow accounts?
Yeah, it would be single. We really, I've had several calls on this trying to see how we could make this work, at least on the Bank of America side. I can't speak for how others would do it, but we tend to not be able and have the operational capabilities and then all the other items to be able to do multi-party, and when I mean multi-party, meaning multiple landowners, to be able to have the operational capabilities to do all that, given the challenges I mentioned earlier.
So you're a large bank with a lot of staff, and you're saying you don't have operational capacity to hold accounts with approximately 140 beneficiaries?
Yeah, well, the short answer is yes. I mean, it's incredibly cost prohibitive. So just the KYC diligence alone for us is about $1,000 to $2,000 per year to ensure that we're staying up to date with the OCC and the Fed. And so when you add all of that cost in versus the operational burden, you know, it doesn't, for us as the large institution, you know, it can get quite tedious and quite expensive. And so we tend not to be able to staff our escrow within our escrow group. Our escrow group is a relatively small group. Where we specialize and what we're capable of doing is where there is a large sum that is placed in a single account and there is one payment that goes out. That is how our escrow group, given, you know, the clients that we deal with and the size of our business that we focus in on, we just, you know, again, the cost, it's very cost prohibitive for us to be able to hold hundreds of accounts with very, very small dollar amounts. The operational capabilities for us is just not there within the escrow group.
So the issues that you've talked about with multiple beneficiaries would no longer be an obstacle if there were a single beneficiary, i.e. the county on the escrow account. Is that correct?
Conceptually, for us, there would not be an issue, no. If there was a single dollar amount that was placed with a single beneficiary, there would not, operationally would not be a challenge. I do think we would probably still need to potentially KYC the landowners, since that's who the funds are for the benefit of. But operationally, in terms of moving funds, it wouldn't be the same burden.
Okay, and on that KYC, as you're calling it, or know your customer rules, you said the landowners would have to provide social security number, address, and like a copy of their lease. Is that correct?
Yeah, those are the general items. There's their date of birth, driver's license. Those are the broad parameters that we would require, or that we are being required, I should say.
Okay, so switching to the irrevocable letter of credit, you mentioned that those have auto renew or evergreen provisions, and you kind of referred to the you know, like a 60-day notice for the wind company. What is Bank of America's process as far as how often do you reevaluate the company's finances, and what conditions are set that allow the bank to withdraw or no longer offer that letter of credit?
We review, as a general policy, we review clients' credit quality every year, and so reassess their ability to make payments on under the obligations for us, and then obviously broader implications and obligations. In the particular case of the project company, it has a global public rating, it has a global public footprint. You know, we tend to have a longer term view of their credit and others in this type of space, given the size, and not just them, but others. But general policy is every year we review the credit quality.
If you review it every year, does that mean you have the opportunity every year to withdraw or terminate the letter of credit?
Yes, every year we would, you know, conceptually or theoretically, you as the lender would always have the ability to, at the end of that 1 year obligation that would be renewed, if we had not given them 60-day notice, then it would renew again. But had we given them 60-day notice, then we would have the ability to terminate the LC and require them to find a alternative source from another bank or insurance company.
And this, is it within 60 days of the expiration, or 60 or more days before expiration?
No, it's a max 60 days. So it's 60 days. So if it's January 1 and the maturity date is December 31st, you'd have 60 days from December 31st.
What is the burden of proof for a bank to pay on an irrevocable letter of credit?
Yeah, it's a lease agreement. Historically, it's some type of bill, and your driver's license, and proof of ownership of the land, which would be the lease agreement, and that would be it.
So the landowner doesn't have to prove that the company failed to meet its decommissioning obligations in order to receive funding?
No, I mean, the bank's not in a position to determine whether or not the company did or did not. We don't take on that liability. So the short answer would be no. We don't have the capabilities to either determine. That's not our expertise. We've issued the LC. It's in favor of the landowners. They make a claim. They submit all their documentation. If that specific landowner is under the LC arrangement as an eligible party, then they would be able to make claim for their whatever claim they were making.
So what constitutes a claim? You know, if could a landowner walk in and say, I want to take this turbine down right now, give me the money?
Theoretically, it could. The LC is for the benefit of the landowners. And then in the event where that happened, where the LC was drawn, we would then turn to the project company and say, you need to pay us back. And then it would be up to the project company to determine whether or not that was an allowable borrowing or drawing under the letter of credit. And then the project company would need to seek remedy if that wasn't the case.
But the company ultimately determines whether or not it gets paid.
No, it doesn't. Once the LC is issued to the landowner, the landowner would make a claim claim may not be the right word, makes a request for payment under the LC. The bank is required to make payment to the landowner. Doesn't need to speak to the company, doesn't need to do anything with the company. We would make payment to the landowner. Once money is out the door, landowner has received its funds, we would then notify the company, hey, we received a $35,000 request under this existing LC. We would bill them for that. And then they would then need to seek through their legal counsel or whoever they would employ to determine whether they felt that was an eligible drawing by the landowner.
So essentially it's going to end up of a battle between the landowner's attorney and the company's attorney.
Well, I guess if it would be determined as whether or not the landowner felt like it was, I'm going to assume the landowner doesn't just going to draw under the LC just to draw under the LC, and so, and to be fair, I have the same issue with an escrow, right? Whereas under an LC, you can get cash. Under the escrow agreement, and you try to make claim, you won't get cash because EDP, as the owner of the project, has the immediate right to say no, and then you're going to end up in court through that process as well. Because if the landowner truly believes that it was his right to make a claim, project company says no, I suspect that you're going to end up in the same place. Whereas under the LC, the landowner would receive funds and then they could settle it out in court if that was ultimately where the path that they went.
Still in court.
Okay, thank you.
Yeah.
Are there any other questions for this witness?
Hi, Travis Taylor. Do you need sworn in or anything?
I just need your name and address.
28686 North 3050 East Road, Genoa, Illinois. I think the only other question I had how easily and accessible would Bank of America be to landowners and/or the county? Since none of their branches are located within Mclean County, I don't recall. I mean, on either regards, either as a letter of credit or escrow account. And do you think that may be one of the main issues on them being able to fulfill the Know Your Customer agreement?
It's a great question. So on the escrow or the LC, you have the ability to go into any branch, and if there isn't a branch in the county, you can in the LC side you would have a master email inbox that you could make requests to. On the escrow side, you would have the same thing, and you would have phone numbers as well, or fax. So you have multiple levels of communication to do all of those things. On the KYC item of your question, typically how it would be done is the bank would not reach out directly to the landowners. The bank would reach out to the project company, and the project company would be responsible for requesting all of the know your customer KYC information from the landowners, either working directly with the county or directly with the landowners, and then they would supply that back to us. And then we would go down our process of internally, registering those individual owners of the escrow account, i.e. the landowners. And that would be all done through, I suspect, through email.
Okay. I think that concludes all my questions. I thought I had one other one, but I can't recall right this second. So I appreciate it.
Yeah, thank you.
You have a question, Mr. Schwartz?
Hi, I do have a question.
State your name and address, please.
Mike Swartz, 2242 Westgate Drive, Bloomington, Illinois.
Okay.
My question, if you could clarify on us regarding the information that's needed and then the continuation on a yearly basis, where you difference between an escrow account requiring information, individual information, social security number for the escrow and tracking with the bank. How does that differ with a letter of credit where you need to keep the information accurate as well on a potentially an annual basis? If a landowner would pass away, it go to an heir, would that information also need to be kept up on an annual basis and corrected as needed?
Yeah, good question. So information for escrow versus LC is different. On the escrow, you would need to, so day one, you're opening the escrow, driver's license, social security number, lease agreement and or showing of ownership of the property. And then once that's all been concluded and done, there's typically not ongoing maintenance of that, so it's expected that would remain in place. This is specifically for escrow. In the event that somebody passed away and that moved to an heir and that needed to be changed, you as the new property owner would need to provide their new social security number, driver's license, transfer of title, all of those things to the escrow group. So that would be the project company and the bank, and then they would need to open up a new escrow arrangement, and then the same process would hold true. It would continue on until something new needed to change. On the letter of credit side, day one, we would, upon issuing the letter of credit, the project company would collate a list of all of the landowners' names and addresses. And I don't believe we would need social security numbers for that. I think it's just names and it's just addresses. And that would be the responsibility of the project company to maintain on an annual basis or as changes occurred. So if someone passed away and an heir to the family was now the owner of the property, they would need to make sure that information found its way to the project company, and then we would update the LC once the project company provided us with that information. Did that answer your question?
Yeah. Thank you.
Okay.
I had another question about the requirements for initiating them. I mean, we wait for this from a standpoint, part of our system, isn't it?
You didn't come through very good there, Mike.
I had another question about decommissioning them, but I think I may wait if I need to get loading tonight to go that direction.
Do something about that.
Mike, do you have another computer that's on in your room or something? It's very echoed and boggled.
I don't see anybody feeding back.
I apologize. I do have another one here, but I think it's been muted.
I can't pick it up.
Yeah, It's not us.
Okay.
Sorry, Mike, we can't understand what you're asking. Do you have a question there, Anna?
I was just gonna say, Mike's good. He doesn't have any more questions
You're gonna
at
say,
this time.
okay, thank you.
Yep.
Is there any other questions?
Hi, it's Travis Taylor again. I was wondering, I recalled the question that I was that I couldn't remember previously, if that'd be okay.
We're not supposed to do that, but go ahead.
I was just gonna ask, he referenced that they are more of a letter of credit type of bank because it seems to be easier on their end than an escrow bank. Do you think there's other banks, maybe smaller banks, not quite so large, that might be more of an escrow bank than a letter of credit bank? I think that was mostly what I was going for on that question.
So in the U.S., there's thousands upon thousands of banks. So I would probably say there is probably much smaller banks who have the ability to handle this type of escrow arrangement far better than we do. But I do think you will still run into the fact that an escrow arrangement, regardless of whether it's with us or whether it's with a smaller bank, is still a tri-party arrangement between three parties. And the KYC requirements may differ slightly at some institutions and others. I can only speak for ours, but but it should hold consistent that you still need consent of all parties that are involved with that escrow arrangement to release funds. But operationally, from just a pure ops perspective, yeah, there's probably there are, I'm sure, institutions out there that are better equipped to handle these smaller, large volume of escrow arrangements than we are.
Thank you, I appreciate it.
Any other questions? I don't see any, Phil. Do you have another person for testimony?
Does Mr. Bierwinkel want to offer any testimony at this time?
Yes, I'd like to say a couple of things.
Would you state your name and address for the record?
Sure. Travis Bierwinkel, 1501 McKinney Street, Houston, Texas.
Could you spell McKinney, please?
McKinney.
Thank you.
You can go ahead.
Thank you. I'm sorry?
Does he need to be sworn in?
Yeah, if you're gonna give testimony, I swear, I'm sorry. I'm glad you keep me on track. You solemnly swear that the testimony you give in this case now in hearing be the truth, the whole truth, and nothing but the truth, so help you God.
I do.
Thank you. You already gave his name and address.
All right. So my name is Travis Bierwinkel. I'm with EDP Renewables, and I just wanted to talk a little bit about how we view these security instruments internally and how we typically process them, and how we look at it that way. So an escrow requirement would be an unusual requirement for us. I'm not aware of any other jurisdiction that has made that requirement upon us for either a wind or solar park. Which is why when we started this process, we had to, talk to Bank of America, talk to several other banks about what that process would look like, because we haven't tried to do it before. And in addition to Bank of America, we received similar answers from JP Morgan, and other banks that we deal with regularly. All of them cited the administrative burden and the know your customer requirements as being very difficult for them to manage, and not something that they had encountered before, and not something that they feel they would be well equipped to handle. For a letter of credit, the way we process those internally is just as Derek talked about. We provide a list of the landowners to the bank that would be the beneficiaries under that letter of credit. So anytime that there is a transfer of the property, those processes would happen automatically on our end. Those types of transfers already come to us in the form of, we have to update our lease agreements and make sure the correct parties are being paid and those types of things. So as we naturally use that information to update letters of credit on file, and that flows through our process automatically. So there's no additional requirements for the landowner to provide information under future transfers and those scenarios. Talking about the bank that we work with, we had Derek speak because we have a great relationship with Bank of America. If we were to put in place a letter of credit, that's probably who it would be with. But at the end of the day, that is up to the county to approve. So if something were to ever change with Bank of America, then it would also, just as it could be their option to move on from us, it would be our option with the county's approval to move on from them. So if Bank of America ever had financial trouble, anything like that, we could choose to move a letter of credit to a different bank that the county could approve, just as they have to approve the initial one, so that there's an opportunity there that if there is any downfall, we can improve the bank that's holding that letter of credit. And that's really all I wanted to say. Derek covered most of our position on the letters of credit versus escrow, and that through this exploration that we've done over the last many months, we found that there are many advantages to a letter of credit, but I'm happy to take any questions.
Let's just say a person didn't notify you of a death in the family. It would just go to the beneficiaries or to the estate, wouldn't actually have to be notified right away.
Not necessarily. I mean, we need contact information and those things. So the lease stays with the land. So absolutely, the heir or the new party becomes entitled to payments and the benefits of the lease, including the benefits under a letter of credit, but there still has to be some exchange of information to update that contact information and those things.
Any other questions from the board for this witness? Any questions? Just gotta say your name again.
Catherine Metzger. So you knew when you took on this project that this county expected to have escrow accounts, and you went ahead and proceeded, is that correct?
No, I don't think that's correct. I think we have a different view on that. I'm happy to get into. Again, that's not the issue before the board this evening, but I'm happy to talk about it if the board wants me to.
I'm confused. You proceeded knowing what our text ordinance said, that you had to use a
escrow account and you went ahead and proceeded with your projects. Is that not correct?
Mr. Chairman, again, while I understand Ms. Metzger's question and the reasons for it, the hearing tonight is supposed to be about the text amendment and not what any particular wind farm did on any prior occasion. It's about whether or not this text amendment is appropriate. And the question should be.
Can I ask a question? Why would he have come here then to have that changed if they didn't want that?
Oh, just so we understand that the setting here, I guess, is that you have a proposal from Phil and his department to amend the ordinance. And the testimony is supposed to be about whether or not the ordinance should be amended, not what it's going to be used for later on down the road or what it might be used for or what someone did in applying for a special use permit 12 years ago. It's supposed to be about whether or not this ordinance should be changed with this text amendment. That's the scope of the hearing today. And while I understand
requested it, correct? Requested this change. Phil didn't just pull this out of the air.
The scope of the hearing is whether or not the ordinance
Say your name again.
Amy Winterland. So just a quick question. I think I heard you say that setting up escrow accounts is an unusual requirement. Can you elaborate on that? Is it unusual requirement if there's only one primary beneficiary? Is that unusual? Or is it unusual if there are multiple beneficiaries? Or are you saying across the board, escrow accounts are unusual?
I'm saying across the board, it is unusual in our experience. Like I said, I'm not sure I have not encountered another jurisdiction that requires a escrow for decommissioning requirements for a solar or wind farm. So regardless of whether that beneficiary is the county or the landowners themselves, the most common financial security that is required is a bond. That is probably 90–95% of what we do. And then the second most common would be a letter of credit. That we have done escrow agreements, but not for an entire project. They're typically for a temporary obligation for construction of one specific component of a project. Something like that, very short in duration, limited scope. But for an entire project, I can't recall ever encountering a request for an escrow agreement. And even beyond just decommissioning requirements, it's unusual for other financial securities that we have to post. So the utilities that we interconnect the projects to often require financial assurance for obligations we have to them regarding maintaining facilities and those types of things. I'm not aware of any escrows that they've required. Again, typically the requirements there are a letter of credit, which often do coincide, with these long time periods that we're talking about, 20 years, those types of things. So, I think overall it's unique to our experience.
So if you were applying for a new special use permit and you read an ordinance that said escrow accounts were required, what would EDPR do?
That's getting off the subject again.
Is it?
Yeah.
Because would you like not apply in that jurisdiction then, or since it just seems like if that's so unusual, I'm surprised it didn't come up much sooner than this. So, thank you.
Thanks. Any other questions of this witness?
I had one more question. Well, actually, I guess I haven't asked too many questions yet. Travis Taylor, 28686 North 3050 East Road, Chinook, Illinois. I was wondering if when you write landowner agreements, if it states right in the contract that typically you offer a letter of credit for decommissioning right in their contract, or if you have a bond right in their contract, if that may be an issue. If the county requires an escrow account and then the contract itself might require a letter of credit, do you have to then have two forms of decommissioning, or is it just one form then?
So our standard practice is to provide a variety of security instruments in our land agreements. Typically, they offer all of escrow, letter of credit, parent guarantee, a bond, and most of them include a statement or other, security that as appropriate. So typically, yes, the landowners, the land agreements do provide for any of those. And we do that for flexibility so that we have the option to do, we always want to be able to provide a decommissioning fund to the landowners. So we want to do that however is best available, or if the only option is that, then there's one of those, and we want to be able to have that flexibility in the leases. Our opinion here that the best available option is a letter of credit, which is authorized by the land leases. So it would be the same for both parties. Earlier was discussed if there was a single escrow for the county. I don't know that would benefit the landowners without doing, making them a beneficiary also. So I don't know that scenario would work under the lease agreements because it says we will provide it to the landowners.
I guess another question is in previous agreements within our county, do some of them have, have they already stated that it is going to be a line of credit, and then maybe that could be the discrepancy on, you don't want to have to pull a line of credit and a escrow account, or is it been verified that they don't conflict, I guess?
No, I think the lease provides for any of those, so I don't know that there's a direct conflict there.
Okay, thank you.
Any other questions from those witnesses? I don't see any, Phil. Do you have anything else?
Well, I'll go down the list. I have Amy Winterland wanted to give testimony.
Yep.
No, I have to swear you in.
Okay.
Unless you want to be affirmed. You want to be sworn in.
Swearing's fine.
You solemnly swear that the testimony you give in this case now and hearing be the truth, whole truth, nothing but the truth, so help you God.
I do.
You gotta state your name and address again.
Amy Winterland, 22825 N 3075 East Road, Colfax. So I don't know how we do this, Phil. I provided an email to you. I'm just going to read it. That will be my testimony. I don't know if that becomes an exhibit or how we do that, but I intend to make 3 points tonight. First, I spoke with the vice president at a local bank regarding letters of credit, a local Bloomington Normal Bank. In his words, letter of credits are basically short-term loans. The buyer of the letter of credit, the wind farm, goes to a bank, asks the bank to financially guarantee that the wind farm can repay a specific amount of money. The bank will do a review of the financial status of the wind farm, and if satisfied, will issue the letter of credit. The problem is the letters of credit must be renewed, sometimes every year. They expire at a specified point in time, usually 1 year, maybe 2. At the end of that 1 year or 2, the bank will reevaluate the creditworthiness of the wind farm, and they will either approve or not approve a new letter of credit. If the bank has concerns with the entity's financial standing, they will not renew the letter of credit. There is no requirement that the bank renew the letter of credit. The fact that the letter of credit is irrevocable simply means the terms of the letter of credit cannot be changed during the duration of that particular letter. It does not mean the bank must issue the wind farm a new letter of credit every year. If the wind farm cannot obtain a new letter of credit from any other bank, then Mclean County has no financial assurance. They have an expired piece of paper and they have no money in the bank. A fully funded escrow account would mean cash in the bank, regardless of the future financial standing of the wind company LLCs. My second point is I think it is confusing to discuss this letter of credit issue in the context of all 4 existing projects. As the Farm Bureau clearly laid out in the March 3rd, 2020 neutral exhibit number 1, each project was approved with different stipulations and different requirements. Twin Groves and White Oaks were approved before the current ordinance was created. EDPR's Brightstock and Invenergy's Mclean County wind energy projects were approved after the ordinance was enacted. The first group, Twin Groves and White Oaks, may be problematic according to EDPR because each landowner would potentially be a beneficiary requiring a separate escrow account. Contrast that with the second group, where Mclean County is the primary beneficiary. There does not seem to be a problem with establishing an escrow account with one beneficiary, i.e. Mclean County. So there is no need to change the escrow account requirement for these projects or future projects. It seems to me something could possibly be worked out between the wind farm, the Twin Groves and White Oaks landowners, and Mclean County, where possibly Mclean County could act as the primary beneficiary of one escrow account for the benefit of all the impacted landowners in the first 2 projects, similar to the role that the county current projects. 50-43P should be amended, but not as currently recommended. The language referring to the decommissioning fund being $35,000 per tower, beginning 12 years after the start of the operations, and only requiring removal of the foundation pedestals to 40 inches below grade should be struck out. These provisions are confusing and are inaccurate. Clearer language would state, the applicant shall set up an escrow account as a decommissioning fund and will comply with the deconstruction of commercial wind energy facilities and financial assurance as set forth in the Illinois Agricultural Impact Mitigation Agreement as attached to this application. Thank you for your time and consideration.
Yeah.
Question?
Do board have questions of this witness?
Yeah, I have a question. Amy, are you a landowner? Are you impacted by any of these agreements?
I am a landowner.
Are you a landowner with a windmill on it?
Currently impacted by any of these agreements.
Okay.
That doesn't mean that in the future, I don't have concerns.
Any other questions from the board?
You're asking the county to take on the liability of administering this. And I mean, ultimately, the taxpayers would end up having to pay for it until such time as it got through court and got worked out, if it ended up being a big problem.
I'm asking the county to take on the same role that they are already taking on with the last 2 wind projects. I'm asking them to set up an escrow account in which the county would be the primary beneficiary. It would expedite the process with the banks. It would be, I suppose, an issue that you would have to work through with each of the landowners to make sure that they would accept the county as their escrow beneficiary as opposed to themselves being the beneficiary. But it's the same role they're taking on now under the last 2 wind projects. Did I misunderstand the question?
No, I think you got it.
Yes, you understand.
Did we have that kind of liability on the last 2, Phil?
We do not.
So my understanding is under the last 2 projects, escrow accounts are to be set up and Mclean County is the primary beneficiary of that escrow account for the benefit of the secondary beneficiaries who are the landowners. But the secondary beneficiaries have no rights unless the county fails to act in a decommissioning situation.
Did you direct that to Phil?
I don't know if that creates liability or not, but that's the way the ordinance reads. That's the way the AIMA reads.
I still think we need to address what we want the text amendment to say at this point.
I just want to respond that the AIMIA makes it different than the earlier wind farms, and to try to superimpose an agreement between the county and each landowner is different than what the ag mitigation agreement is.
Okay, does anyone else have questions of Mrs. Wonderland? Thanks a lot.
Thank you.
Okay, Phil.
Julie Cotter.
I don't have anything to say.
She's gonna pass. Your mic's off.
Travis Taylor.
Yes, this is Travis Taylor, 28686 North 3050 East Road, Chinook, Illinois.
I need to swear you in at this time. Do you solemnly swear that the testimony you give in this case now and hearing will be the truth, whole truth, nothing but the truth, so help you God?
I do.
I think you can go ahead.
Okay. I just want to thank everybody for taking the time tonight to review this. I I really just hope that everybody on the ZBA takes into consideration the most financial secure, immediately secure funds, the ability to get them regardless, but the most secure funds that are already in the bank, and takes into consideration the previous projects and the issues around it, to make sure that we're not coming down this road in a few more years trying to change a line of credit into a bond or some other secured funds. And if they're going to think about considering a secure way of doing it, why change the rules all the time? So I appreciate everybody for taking time, and just want to make sure that it's brought into perspective, what's there, and do we change the rules, or do we just keep changing the rules to make it more appeasing to have more of them, or keep the rules the same and make everybody follow them? So I appreciate it again. Thanks.
Any questions for Mr. Taylor on the board? From staff?
No.
Anyone in the audience have questions, Mr. Taylor? I think you're okay. Go on, Phil.
Catherine Metzger.
Do I need to be sworn?
Yeah, I'm just writing the name down. Do you solemnly swear that the testimony is given in this now and hearing be the truth, whole truth, nothing but the truth, so help you God?
I do.
State your name and address again.
Catherine Metzger, 20645 North 825 East Road, Carlock, Illinois.
Thanks.
Once again, I believe this request is about greed. It's about freeing up a significant amount of money, typically about 90% of the working capital, so it doesn't get parked into an escrow account so they can use it on another project. Escrow money held by a reputable escrow account is akin to cash in a lockbox. With the exception of possible theft or embezzlement, we can reasonably be certain that the cash in that locked box will be there when it's needed. Letters of credit do not provide the same security as escrow money. Security provided by letters of credit varies with the financial ability of that issuer to redeem that letters of credit at the maturity. Certainly, a triple rated issuer provides more security than a junk security. Suppose that the county were to permit the wind companies to substitute a AAA bond for an escrow account. The county would need to have some mechanism in place to constantly monitor the quality of that issuer. A AA rated issuer today might be downgraded in a few months if financial conditions of that issuer deteriorates. Case in point, Bank of America, 2008. So that monitoring of existing money in an escrow account is relatively easy, but monitoring the financial condition of a letter of credit issuer, especially a long-term basis, is practically impossible for the county and each landowner. A letter of credit may be irrevocable, but if the issuer has financial inability of making it good on a promise to pay, the letter of credit is useless. Cash in the locked box is always going to be more secure.
Hang on. Have any questions from the board on this witness? Julia?
Catherine, I'm going to ask you the same thing. Are you currently a landowner with any windmills on your properties? Are you under any of these lease agreements?
No, I'm not. We do
Okay.
have 100 acres that we inherited. It could potentially have some someday, but no,
Okay.
currently.
Thank you.
Any other questions?
Sorry.
Got a question from Bill?
No, I don't.
No, I haven't. You're free. Thanks. Want to move on?
Anna Ziegler.
You like to be sworn in, Anna?
Sure.
You solemnly swear that the testimony to give in this case now and hearing will be the truth, whole truth, nothing but the truth, so help you God.
I do.
State your name and address for the record.
Anna Ziegler, 2242 Westgate Drive, Bloomington, Illinois, 61705.
Go ahead.
Right, good evening. I'm here as a representative of Mclean County Farm Bureau, and Farm Bureau represents farmers and farmland owners, including members that currently have turbines on their property. Our interest is in assuring that the county has provisions for adequate financial assurance for decommission and land restoration if and when these projects need to be decommissioned. And what does adequate mean? Well, we won't know until a number of years from now when these turbines actually come down. That's when we'll really know the definition of adequate. Like an insurance product, the hope is that the county and the landowners never have to use this financial assurance, that the company meets its obligations, properly takes down the turbines, takes out the roads, and removes the foundation to the depth required by either their permit or their AMA. So if the company meets all of those obligations, the financial assurance is not needed. This is only needed in the case that a company does not meet those obligations. So as we've referenced previously, the existing wind projects fall under different rules for the different times that they were put in place. At the previous hearing, we submitted an exhibit, and I attempted to provide an updated copy of that because there are 2 typos on it. So I'd just like to quickly correct those. It was in the publication. So if you look at that chart, the date of approval for the Twin Groves Wind Farm was actually 9/20 of 2005. And then the Brightstock one was actually 3/20 of 2018. So I just wanted to mention those corrections. So we have some process concerns about the process that has happened here. We were seeking clarification on if this zoning ordinance change would be applying to future permits only or to existing permits. I think we've gotten clarification, but we just like to reiterate that we believe that any existing permit holder should be required to apply to amend their special use permit for the changes they're seeking. So if they have an existing special use permit already in place, they should be required to apply to amend that permit, even if this change to the ordinance is adopted by the county board. We contacted a number of our members who are landowners in the Twin Groves and Brightstock projects, and none were aware of this hearing before we contacted them. A few of them, maybe half a dozen, had received a letter from the company that previously presented testimony, EDPR, about a possible change to their financial assurance, but it didn't mention the hearing date. And so our concern is that these landowners that could be impacted by this change don't have the opportunity to participate in a public hearing. We believe that's their right, and we believe the company's obligation to inform them of these changes. So that's our process concerns. We also have some substantive concerns with the change to allow an irrevocable letter of credit. And I'm not a financial expert, but we think because the irrevocable letters of credit expire, that they present some challenges with the life of the project that we're talking about here. These wind turbines are initially projected to have a lifespan of at least 40 years, and an irrevocable letter of credit that has an annual expiration date doesn't provide very much of a guarantee for 40 years in the future. The auto renewal or evergreen clause that the bank referred to earlier seems to be for the benefit of the company that it would auto renew. But as the bank testified, they will reevaluate the company's finances on an annual basis and may or may not reissue that letter annually. So the auto renew doesn't really provide much of a guarantee to the landowner that the letter will be renewed. The decommissioning of these projects likely won't happen in the current landowner's lifespan. It probably won't happen during the careers of anyone who's present this evening. And so we need to look for something that has a long life that will be there if and when it's needed. And I don't think we've adequately answered the question that what recourse would a landowner have if the irrevocable letter of credit is not renewed at some point in the future. We think that there's not a lot that they could do about it if a bank decided not to reissue and the company was unable to find another bank that would issue them an irrevocable letter of credit. At that point, there's no financial assurance. There's nothing. If the county does decide to make this change and allow irrevocable letters of credit, we'd like to suggest a minimum of a 36-month term. So a letter that's valid for at least 36 months with a requirement to renew 12 months prior to expiration date. And the reason for that is that wind projects are not considered abandoned until they have ceased operation for 12 months. So if a project is not yet abandoned, the landowner wouldn't have any opportunity to collect on that letter until they get that abandoned determination. And so the bank mentioned a 60-day notice. Well, if it's 60 days prior to expiration, they decide not to renew or the company decides not to renew, they've still got another 10 months before the project is technically abandoned. So that length of time is problematic as well. In our research, we identified 2 other counties that have escrow accounts in place for wind farms. There may be others. I ran out of time to contact every county, and some of the ones we did contact have not yet responded. So the 2 we identified that do have an escrow account in place are Bureau County and Champaign County. And in both those cases, the county is listed as the beneficiary of that escrow account. So there is one beneficiary, which could address the issue of listing every landowner as has been outlined by the company and the bank.
Any questions on the board? Anyone else have questions of Mrs. Ziegler?
I do. I have a question, sorry.
Okay.
Anna, you guys are a national, organization, and through your AMA, you've come up with a lot of different guidelines that the Farm Bureau has put forth as what would be standard. And you mentioned that you have Bureau and Champaign as escrow accounts. Am I then to assume that the other counties typically have irrevocable letter of credit out there?
As I said, I didn't have time to complete my research. I was looking at existing wind projects. There's also the issue of what's stated in the ordinance, and those vary between counties. When I did the research for the March hearing, we identified 3 counties that listed escrow only. Most of the other counties either didn't specify, they just used the term financial assurance, or they listed multiple types, and some of those included irrevocable letters of credit. So some counties do accept that. Champaign County, for example, they require both an irrevocable letter of credit and an escrow account. And then I don't remember the exact terms, but over the life of the project, the company is required to pay down the value of the irrevocable letter of credit by putting additional cash in the escrow account. So that's kind of maybe a hybrid or a compromise option.
Yeah, no, I understand that. Typically, your membership, how do they look at having a county in charge of money that they want access to? Going through that extra step. So the county has to have that in place and would be the one doling it out. How is that typically looked by your membership to have to go through another step like that?
I don't know if I can speak specifically to that. I didn't ask that specific question to the members I talked to. I think in general, most viewed a escrow account more favorably than irrevocable letter of credit. They share some of our same concerns about the expiration date and that kind of thing. I don't know if, for example, prior to this evening, I'd never heard before that a company could deny the opportunity for a landowner to receive funds from an escrow account. That was a new piece of information to me. So if that is in fact true, then that means that's a downside to an escrow account. And so,
well, and I'm just thinking from a landowner's point of view. So if I'm a landowner, I'm saying I need decommissioning money. So now I have to go to the county, who then has to go to the company to get that money. So as a landowner, I'm having to go through two people now to get to that money. And that seems like a drawback to me.
I would agree. I think that most would prefer to be named. I would think perhaps, again, I didn't get this specific, and there's a lot of intricate details here. I would think that their preference for an escrow account would outweigh their concerns about having the county be the beneficiary. I think given the options, I think they would still prefer escrow. But I'm speaking a little bit beyond, beyond, I'm not sure if I can say that without doing a more adequate survey of the landowners in question.
Anyone else? Staff?
No.
Would anyone else listening in have questions of Ms. Ziegler? Don't think so. You're off the hook.
All right, thank you very much.
Thank you.
Here, Thalgut.
I have none.
Steve Myers.
Here. And yes, if I may.
Okay, we'll have to swear you in if you're going to give testimony.
Yes.
You solemnly swear that the testimony to give in this case now in hearing be the truth, the whole truth, and nothing but the truth, so help you God.
I do.
Would you state your name and address for the record?
Steve Myers, M-Y-E-R-S, 301 East Cedar Street, Leroy, Illinois, 61752.
Got it, Phil? Go ahead.
Thank you. I'll be brief. So at the end of the day, as you look at this text amendment, I think the comparison is between the most secure, which is the escrow account. I think that's pretty well established that, the cash in hand there's no ambiguity in cash in hand. And I think that's a key topic here for this group. And as individual property owners, I think that's the difference. When Mr. McKinney and the fellow from Bank of America both had indicated that, as compelling and nice of folks as they are, and they're nice people, the way to do business isn't necessarily meaning that EDPR will be doing business with Bank of America in the future. There's no guarantee of that. So as nice as the testimony from that fellow was, I find it not very compelling because, again, as Mr. McKinney said, he could be doing business with another bank somewhere down the road. In a letter of credit, you still have to make the submission. I don't think that will be a lot of difference between, as individual landowners, getting their decommissioning money from a letter of credit as opposed to the escrow. And I say that because, again, in testimony given that once I submitted a claim to the bank and all the boxes have to be checked. We don't know what those boxes are right now to claim those monies from a letter of credit, just like I don't know, quite frankly, what it takes to get a decommissioning money from an escrow account. So again, there's some vagueness that goes along with that. But to assume that the word irrevocable is irrevocable, that doesn't seem to be the case here tonight. Simply why is because both the bank and EDPR, the wind company can move on. Irrevocable means that we'll be married together forever. Well, that's not the case, because both the bank can drop the wind company and the wind company can drop the bank. So again, I come back to what's the most secure way to do that, and I think that the burden of that does not fall in favor of a irrevocable letter of credit. The most secure is to have the cash in hand. I do understand the compelling testimony about the tri-party agreements between landowners, banks, and companies, and I say, why not? As a farm manager who represents landowners in this particular case, if you need my information, I'll give you my information to secure that decommissioning money for that. So I understand, and I certainly understand that it does become more burdensome on the escrow folks, the people who have to keep their information up to date. In this particular example, Bank of America on behalf of EDPR, I understand that there's more work that goes along with that, and I'm sorry that has to be the case, but that would probably actually be the case. But again, I'll wrap it up here. I think there's just no ambiguity in getting escrow funds in hand. Certainly, a letter of credit is another way to do business. But as I think Mr. McKinney also said, a bond could do that same thing as well. So the request for payment, again, I don't think there's any defining differences between those. So just the most secure way of doing business is to have the escrow funds in hand, deposited. Yes, it may be a little more cumbersome, but on behalf of in particular a landowner that I represent in this case, we're willing to give the company the information they need so they can make that escrow perfected in Houston. That's all I have.
Thank you. Any questions of Mr. Myers?
Mr. Myers, I just want to just to verify, you're a farm manager who's representing a landowner who has windmills on their property and is under one of these lease agreements?
That is correct.
Okay. And when you say Mr. McKinney, you're talking about Mr. Bearwinkle from EDP when you mention that?
That is correct. I'm sorry. I butchered his name. I'm sorry, Mr. Bearwinkle.
That's all right. I wanted to make sure that we were going with the same person.
Yeah, I agree. Yep.
Mr. Myers?
Mm-hmm.
This is Jim Finnegan.
Yes, sir.
Your bank does letter of credit, so right?
They do.
And if somebody comes to your bank with a letter of credit and says that it needs to be paid, your bank does pay it, right?
Yes, sir. And I think Mr. Timmerman and the fellow from Bank of America, again, when someone makes a presentment against it, when a bank, and I'm not a banker, Mr. Finnegan, and you know that, I'm just a dumb old farm manager, but the whole basis of a letter of credit is that that paper is saying, whether it's Bank of America or First Farmers Bank or Busey Bank, whoever it might be, is backing that person who's presenting that letter of credit.
All right, thank you. I just want to make that a record.
You bet.
Anyone else have questions of Mr. Myers? I don't see any, so I think you're off the hook, Steve. Thanks.
Thank you. Thanks so much.
Lori Sleater.
Saw her name up there once.
You're gonna pass. You gotta. Oh.
perhaps we can at least finish the first round of testimony. I have no other names on the list, but I have two communications that were submitted that I'd like to read into the record. The first one is from John Jacobs, who indicates, I am opposed to the proposed change to the use of a letter of credit. When cash is put in escrow, we know it is there if needed. A letter of credit does not provide that safety net. There is no mention of the rating by an independent rating agency such as Moody's or financial strength required of the bank issuing the letter of credit. We are in a period of economic stress with many banks struggling, which could lead to bankruptcy. EDPR is a subsidiary of a foreign company. We don't know if they would use a foreign bank for the letter of credit. This is simply a cheap way out for EDP not to have to comply with original agreement. I represent my family who has a Shinoa farm involved in the Brightstock project. I have faith this proposal will be approved, however, will not be approved, excuse me. However, if by chance it is approved, the financial strength of the bank issuing letter of credit has to be set in the policy. I manage the bond portfolio of Country Insurance Company, parentheses, 13 billion of bond assets, unparentheses, and have numerous investments in very financially strong bank bonds. I feel a minimum of a AA rating by Moody's or Standard & Poor's would be a prudent requirement, along with bank required to be listed on the New York Stock Exchange. These types of requirements would at least provide some safety for the landowners. Lower rated or smaller banks would charge less for letters of credit. This would be another way EDP would have a lower cost while increasing risk on the landowner. The second communication is from Tim Rhoda. Dear Sir or Madam, I am writing regarding the upcoming hearing regarding EDPR's apparent request to change the terms of its decommissioning plan with regard to Brightstock Wind Farm in Mclean County. I am an Illinois attorney writing on behalf of my father, Darwin Rhoda, and my aunt, Rosalind Mosher. Both my father and my aunt own land on which turbines are currently built. I don't have a lot of details regarding EDPR's request, but I do not see any compelling reason to deviate from the current plan, which I understand requires a cash escrow account to be established and funded for the eventual decommissioning of the wind farm. One of the largest concerns we had with the wind farm involved the potential obsolescence of the wind farm and/or EDPR's potential insolvency. If either or both were to occur, my family would want to be assured that our land is returned to its former condition. I doubt that it would be economically feasible for the landowner to pay the cost associated with tearing down a tower and remediating the land for farm use. Instead, the land would likely become useless and the wind tower would become an eyesore. I understand that the current structure of the wind farm requires that cash collateral shall fund an escrow account devoted to the decommissioning of the farm by a date certain. I further understand that EDPR would like to change this term to allow for an irrevocable letter of credit in lieu of cash. I am uncertain from where such a letter of credit is to be obtained. However, I do not view a letter of credit to constitute a sufficient substitute for cash collateral. It is impossible to know what the financial status of either EDPR or a potential guarantor might be decades from now. I suggest the current decommissioning plan should remain in place. Timothy Rhoda, 15 Fountainhead Circle, Henderson, Nevada. Those are the only two communications that I have to read into the record.
It's 10 o'clock. Where do we want to go with this? Is there any rebuttal?
Yes, this is Travis Bierwinkle with EDPR. I would like to make a rebuttal statement
Hang on
Do
just
we
a
want to do
second.
that this evening? Sure.
What's the board's feeling on this?
I haven't gotten to talk. This is Tim Jolly.
I don't
Were
know.
you
We're
on the list
over
as
with in a short amount of time.
10 o'clock's always been the magic bewitching hour.
Yeah.
So we can change.
Well, I think if we were at a point to where we knew it was 15 minutes or a half hour, we might could whip it out, but I'm not sure that we're gonna be there. I'm not gonna be here till midnight, Julia.
I was gonna say, don't do it.
So I think at this point, we're at a point. I mean,
I think it's important to let everyone talk and take our time. I have no problem adjourning and
that's a recess.
our discussion next month.
Agreed.
And I think additional discussion kind of helps us remember what we talked about, look at our notes and remember things rather than just going straight back in for only discussion. So
I really like Ruth's point of making sure that we hear every point from everyone to the extent that that's rational and possible.
That's what we always do or try to do. So why don't we do this? We have to have somebody make a motion for recess until December.
So move.
Second.
It's,
Would you be willing to set it for 7:30 on the 1st of December? Then if we had a short case, we could have it before that.
a good idea.
Yes.
Let's say 7:30, December what?
December 1.
December 1. We're gonna recess till 7:30, December 1.
Tim Jolly.
I got that gavel tonight.
Oh, this is Tim Jolly. Can you hear me?
We're adjourned. Sorry.
Hello? This is Tim Jolly. I did not get a chance to speak. Can you hear me?
Will he be given an opportunity next week?
Yeah.
Okay.
Yes.
Next month.
On the 1st of December.
Next month? That'll be just fine. I didn't have my name called and I had request in, so just kind of wondering. Thank you.
Okay. Good seeing everybody. Have a good one.